Hi, this is Jeffrey Kerr at Kerr Financial Group. Today's Thursday, March 21, 2024. The start of March Madness and the NCAA basketball tournament, but the March Madness carries over to the global central banks. As I mentioned on Monday, several meetings this week. Bank of Japan, BOJ, I'll come back to that one. They raised rates. Bank of England earlier today, they held rates steady. Swiss National Bank in Switzerland, they cut rates. I think it's the first of the global central banks to actually cut rates. And then we have the Fed yesterday held rates steady, and that was expected. Powell, everyone watching Powell and to see what he had to say in his press conference, kind of a typical bureaucrat, kind of playing both sides, but couple of nuggets out of that is that he mentioned that reducing interest rates too fast would be inflationary, so he's guarded against doing that. However, he did go in and say that interest rates are peaking, quantitative tightening peaking, and that's move towards looser monetary policy, and that he does expect to do three cuts this year. I think it's going to be very interesting to see how they play out, especially if they're doing them in after Labor Day in the height of the presidential campaign. The Fed's always tried to stay neutral in terms of politics, but in today's world, who knows? And I think it's interesting about the reaction yesterday in the U.S. markets. Stock market rallied hard. We mentioned on Wednesday that there was some chatter about the markets being too hedged or expecting hawkish language from Powell. Didn't get it. We had a nice relief rally. Also, follow through today. So in regards to the U.S. stock market, it looks pretty good here. The Reddit deal is coming down. I mentioned that earlier this week. It's coming out today. So we'll see. I don't know how strong the economy is recovering and growing, and I think there's still some headwinds here. But this news from the Fed is certainly bullish for the stock market. Turning to the Bank of Japan, I think it's interesting too. They hiked rates. They moved rates higher. Now again, their interest rate is 0 to 10 basis points, or 0.1%. So just minuscule rates anyway, but they raised them. So typically, when an interest rate moves up, it's bad for the economy, higher costs, and a bad economy, bad stock market, bond market sells off, and your currency usually attracts a little bit more buying because of the higher interest rates you can get there. In Japan, on Monday night when this was done, the stock market goes up about 2/3 of 1% and was up 2% last night in follow through. Bond market, instead of going down in price and higher in interest rate, went up in price and rates go lower, and the currency, the yen, actually sold off. So it's just interesting that I haven't read too much explanations, but I think it points to that there was maybe too much. Everyone knew that the Bank of Japan was going to raise rates, and maybe they overplayed that hand. It had to reverse, and some people got caught on the wrong side of the trade. So that's enough for today. I'll be back tomorrow for an end of the week, and thank you for listening. Please like and subscribe. Please share. Let me know if there's any questions or comments. Thank you again. Goodbye.